Hey traders, I want to talk about using a screener. This is my Samurai screener. I don't use it all the time, but I use it quite often. The scan I've got set up here is for a bull put spread or put credit spread. And I've actually run the scan, but you can see it here. If I just click up here, you'll see it'll run again in the background. This helps me rule out any risky trades, and it helps me spot trades that I quite like. I have a minimum kind of criteria around 75% being a good trade. So looking at the stack here, we can see Tesla, that is at 77%, you can see here. If we go down to Palantir, this guy's at 75%. So there are two there that catch my eye. And then we have down here, there's another 75% with AMD. The first thing I look at is this probability of max profit column that I just mentioned. And then I also want to look at what is the expiration date? How far out into the future is it? And are there any earnings? If you look at this NVIDIA up here, you can see this little orange telephone symbol. That's telling me that there's earnings coming up during the proposed expiration date window. So I'm going to avoid that. I don't want to have any extra volatility. And in fact, NVIDIA is reporting tomorrow, and it'll be interesting to see how that works out. I'm also going to look at some of the other criteria as well. The total option volume, I think, is important. I think with a lot of option volume, you have a lot of liquidity, which basically means it's much easier to open and close and manage a position. And you can also expect a fairly tight, big bid-ask spread. In fact, you can see here that it's showing that it's only 1 cent just beside it, which is always a bonus. So let's take a look at Palantir. If I open this up, I like the 75%. I think that's my sort of baseline criteria. I like Palantir as a stock. I think it's been somewhat oversold recently, but it seems to have found some new legs. So I think that's worth looking at. And so if we come down here, we can analyze it, and we can see that for our strike, they're recommending a sell put of 115 and a strike of 110. We can see the bid ask is a little bit wider than it's quoted up in the table, and we can see IV and we can see open interest, which are both okay in this case. So I kind of like Palantir, so I think I'm going to go to the next step. So what I'm going to do now, once we've decided we like Palantir, the next thing to do is actually go and jump into Yahoo Finance. This is free. You don't have to pay for this. I do have a silver membership, which gets rid of the adverts and gives me a little bit more information. But the first thing I'm going to check here is this summary table. And I'm going to go down here and I'm going to look at earnings. And we can see here earnings are not until the 4th of August. So our proposed date for this trade, if we go back, have a look at our scan, you'll see that it was the 6th of June, 6/6, which is outside of that date. So that's great. So I check up other things in here. PE ratios sometimes can be important. That's down here. Not so much for Palantir. 536 is huge, but there are other reasons why I'm not interested in that, and perhaps that's something we can talk about another time. Volume is great. I like it, and I can see the previous close price here as well. So now I'm going to go into the technicals. I'm going to go and look at the chart. And in the chart, I've set this up in a way that works for me. You can obviously set it up any way you want. I have the Bollinger Band, and I have a top, bottom, and mid of the Bollinger Band, which you can see in these shades of blue. And I also have the RSI, which is running down here at the base. And we can see the RSI at the moment is showing 58, which is slightly above neutral, but certainly is not in overbought territory. So I kind of like that. And if we look down here, we can see I'm looking at the date range of 3 months. And I have some other settings in here as well. Standard deviation of 2, which I think is perfectly accurate enough. And then I have a moving average at 200 days, which is this slightly darker line down here. You can see it's 72.06. And then I have the 50-day up here, which you can see is 103.29. So, and we can see the price is sitting somewhat above midpoint, but it's in a fairly narrow range. The width of the Bollinger tells you how volatile the stock is. You can see it's been fairly stable for a while. We had a slight fluctuation here back in the latter part of last month, but I'm not really concerned about that. So this looks good. I like what I'm seeing here. Now I'm going to jump into Robinhood and we're going to start looking at actually how we go about placing this trade. So here I'm in the options chain. You can see I have sell and I have put selected. So we're looking at the 115. So we can come down here to 115 and we can see that the chance of profit here is actually 87%. That's looking at a straight put. So it's slightly higher now, 75 at put credit spread, which is what we'd expect. And we can see that it's offering us 52 cents. So if we open this up, our 115, we can look at the Greeks. The Greek that I'm most interested in is the delta. A delta of 0.12, as you know from my previous posts and videos, it puts us in that sort of neutral to low risk area. 0.12 is actually very comfortable. Theta is not going to be a problem for us. We're on a very short time span for this, so I don't really need to talk about that. Volume and open interest are both healthy. You can see volume here, open interest. I'm happy with both of those. And so I'm going to select this, and you'll see up on the right hand side here, it tells me that I'm being offered a credit of 52 cents per contract. Now I want to look at what am I going to use for my long leg, my support security leg. We're going to go down and look at 110. If we open up 110, then there's some mildly interesting data in there. The volatility is actually quite high and there's a lot of open interest, which also tells me that there's some interest around a long leg of 110. And there it's going to cost 20 cents. So if we select that and we aggregate these out, we can see that we're being offered 72 cents. Actually, that's not correct because I don't want to do another buy, another sell. Actually, what I want to do is I want to buy. So I want to come into the buy leg here. And now you'll see that's changed slightly. It's at 22 cents. That makes sense because we're now going to take 22 from our 52 and we have our total credit of 30 cents. Now I can think about, okay, I'm kind of happy with that. It's a very low delta on the trade. 30 cents is not huge, but we're in a safety margin. So we can now perhaps continue and look at how many contracts. So for the sake of argument, we'll say we're going to do 10 contracts. So looking at 10 contracts here is offering us $319 for those. And if we look at the review of the order, we can see that we have a collateral of 5,000. We're getting about 319, and that's offering us a reasonable return. It's not huge. It's nowhere near our 20% that we'd normally like, but it's a reasonably safe trade, and I'd be happy to place that. The market's closed right now, so if I submit this, it's actually going to go into the queue. But you can see now it's queued to get open tomorrow. Total credit 319.12. That's obviously after our fees. We have a limit price of 32 cents and we're putting up $5,000 collateral. So that's how I use the scanner to give me some broad ideas, narrow in on some low risk trades. I then move into Yahoo Finance to take a look at Yahoo Finance. We look at the summary, we look at earnings, any other news that might affect the trade, and then we can go into the chart and we look at a Bollinger RSI and some of the other details in there. And finally, we end up in Robinhood, where we play around with the options chain and we choose our strike price for our short and long legs, and then we obviously cue our spread to open in the market in the morning. Well, I hope you find this useful, and I will see you in the next video.